Assalamualaikum to everyone and Madam Khairani Hano. First of all, we want to give a special big thank you to Madam for leading us in this assignment. For this presentation, we have four excellent orators, which is me, Akmal, Arif Fazlan, Jafrizal, and Hafizuddin. So, check out. So today, we want to discuss about four topics, which is the first is voluntary disclosure. The second, not filing your taxes. The third, misreporting how much you earn, and the last one is overstating your tax relief. Voluntary disclosure can be defined as non-financial information, for example, ethical, environmental, and social issues. In voluntary disclosure, there also has voluntary disclosure agreement, which is known as VDA, that described as a contract between your company and the state. Uh, Voluntary disclosure also act as to pay its tax obligations willingly in exchange for state concessions, which is reduced penalties and a limit on the number of years that outstanding tax due is considered. The Minister of Finance had announced a special voluntary disclosure program, which is SVDP. This program is designed to encourage taxpayers to declare any unreported income and also pay any tax arrears. Next, the program also has coincided with the implementation of the Common Reporting Standard, which is CRS, for the automatic exchange of financial account information. AEOI will exchange non-resident information through AEOI with participating foreign tax authorities, as well as receiving AEOI on Malaysian residents from other countries' tax authorities. And the last one is IBM has stated that it will accept all voluntary disclosure in good faith, and that the disclosed information will not be reviewed further. We are going to the next orator, which is Arif Fazlan.
The different types of tax offence, fines and penalties in Malaysia is not filing your tax. You may be wondering what could happen if you file your tax late. From getting fined to pay triple amount of the tax, to be barred from leaving the country. Below is a list of what can happen if you don't take your tax payment seriously. Okay, the first one is you will have to pay more. If you are late when submitting your tax form, you will need to pay a penalty. This will give you unnecessary costs that could have easily been avoided. The penalty will be imposed if there is a delay in the submission of your income tax return form. All income tax return form must be submitted within 30 days from the date stated on the form, or for a period that has been set up by the government. The amount of penalty you will have to pay is as per below. Okay, if you pay tax after 30 April, it will cost you 10% increment of the tax payable amount. And if you pay tax after 30 June, additional 5% increment on the balance of 30 April pay tax if payment is not made after 60 days from the final date. You are barred from leaving the country. If you have arrears or you have not been paying your tax, you will not be able to leave the country, as you will appear on the list under the Immigration Department of individuals who are blacklisted from traveling overseas. And on top of that, if you make an attempt to leave the country without paying your tax, you will also be fined Rm 200 to 2000, be imposed jail time or both. The last fine or penalties if you not filing your tax is you may have to go to jail. You may have already noticed by now that most penalty pertaining to tax involve imprisonment. The worst case scenario that could happen if you don't take your tax payment seriously would be combination of jail time and being fined. You should also understand the difference between tax avoidance and tax evasion. If you don't file for your income tax without reasonable excuse, that is considered as tax avoidance. It carries a punishment of Rm 200 ringgit and 2,000 ringgit fine, imprisonment, or both. Okay, however, you will receive benefit if you file your tax early. The main benefit you can get is receiving your tax refund faster. Most taxpayers are on a monthly tax deduction, also known as potongan cukai bulanan (PCB). This means that there is a high chance that you are overpaying your tax, as tax relief are not taken into account for the monthly tax deduction. Okay, next we will pass to the Muhammad Jafrizal.
Okay, the next different types of tax often fine and penalties in Malaysia is misreporting how much you earn. Okay, the guilty person shall be punished unless he or she have a strong evidence to defend himself. Okay, claiming that you earn a lower income than you do could mean unlawfully paying less tax, but you will risk being fined Rm 1,000 to Rm 10,000. Plus, you will also have to pay 200% of the tax amount that was undercharged. Underreporting your income is also an easy mistake to make if you aren't aware of what types of income are taxable. Okay, besides rental income, dividends, and royalties are all included in taxable income, in addition to employment income. Okay, by the way, what is misreporting how much you earn? Okay, misreporting how much you earn is underreport income, means income that doesn't report in the return if income in order to avoid tax. In a case where the source of any received deposit or investment appearing in the current assessment year is claimed to be an amount added to income or deducted while computing loss, as the case may be in the assessment of such person in any earlier assessment year, and no penalty was levied for such preceding year. Underreported income shall include such amount as is sufficient to cover such receipt, deposit or investment. Okay. Next is what is the various cases of misreporting. Okay, the various cases of misreporting are as under. The first is misrepresentation or suppression of facts. The second is failure to record investment in books of account. The third is claim of expenditure not substantiated by an evidence. Fourth is recording of any false entry in books of account. And the last is failure to record any receipt in books of account having a bearing on total income, and failure to report any international transaction or deemed international transaction. Okay, next I will pass to my beloved friend Hafizuddin. Okay, Hafizuddin, take your part.
The last topic is overstating your tax relief. Okay, what is a tax relief? Tax relief are set by LHDN where a taxpayer is able to deduct a certain amount for money expended in that assessment year from the total annual income. These are for certain activities or behaviors that the government encourage or even necessities or burdens to lighten our financial loads. For income tax Malaysia, tax relief can help reduce a chargeable income and thus your tax. If planned properly, you can save a significant amount of tax. Okay, refer to the slides for overstating your tax relief. That said, you might save a lot of money by filing your tax relief, but you will have to very careful when you do so. Any erroneous information in circumstances impacting the tax liability of a taxpayer or any other person who will result in provision under ITA 1967 113 subsection 1 subsection B, which can be fined of RM 1,000 to RM 10,000 and a penalty of 200% of the tax under charge. You should never overstate your tax relief only to receive a lower tax bill. If you don't have the necessary documentation to back up your claims, you might be fined provision under ITA 1967 119 subsection A, RM 300 to RM 10,000, imprisoned, or both if you don't have them. Make sure you have voucher, receipt, or any other document that can be used as proof when you declare a tax relief, and maintain them for at least 7 years. Okay, that's all from my group. Thank you. Goodbye. See you again. I love you.